Well, good day and welcome to FS Club. And today we're having one of our fun webinars. This is what we've termed CommunityZ Chest. It's an opportunity for a member of our community to just get off their chest what's bugging them, what they're working on, and kind of a day in the life of, if I can call it that. For those of you who don't know me, I'm Michael Mainelli. I'm the executive chairman of Zen Group, and it's my privilege today to welcome Tim Ward. Tim, good to see you.
Hello.
Good.
Good to
Uh,
see you.
yeah, Tim and I have done a number of things over the years together. We'll get on to that in a moment. But I must open, as I do always, with thanks to our sponsors. If it weren't for the sponsors, we couldn't afford to be running these programs, and it is a real delight and a privilege that they let us do so, and also allow us to range so widely over so many diverse and interesting topics, including today's subject. Uh, so the agenda for CommunityZ Chest is I'm going to get a conversation going with Tim about his life and his background, and then we'll sort of tackle some of the things that are on his in tray, things he's finding surprising or funny or whatever. I would point out to you, the audience, that you can ask questions of Tim, as he is the CEO of the Quoted Companies Alliance, and he'll come on to that in a moment. Many of you I know who are interested in small caps, mid-sized caps, the futures of exchanges, etc., will find some of Tim's views interesting. I hope. I certainly do. So please do go right ahead and ask us some questions. Anyway, Tim, we pulled together a bit of a slide here on your life. Do you want to just talk us through some of the imagery here?
Well, thank you very much, and Michael. Thank you very much for the invitation to join you in this conversation. I approach it with a lot of anticipation, and I think that's a very English way of describing that. Let's see what happens. In terms of just looking at this slide, I think one is the Quoted Companies Alliance. That's us or me opening the market when we were celebrating 25 years of the organization, and I'll come back to the history of the organization. But as you can see, I've worked more or less in areas of financial services one way or another. But if you look at the bottom left-hand corner of the slide, you'll see a hand pointing, and it says, for those who can't see the bottom, it says Reception Michael Peters. And that was a graphic design company that I worked for just after I left Pricewaterhouse. And it was still working in sort of financial services in the sense of doing acquisitions and mergers and financial PR and investor relations and things like that. But it really opened up my eyes to the possibilities of marketing. The other thing I'd say is I just love this old Pricewaterhouse logo because I joined in, I don't want to give away my age, but I joined Pricewaterhouse in 1978 when it was still called Pricewaterhouse and Co. And I think this logo arrived just after the and Co was dropped. And in its place was this little blue roundel, which some wag in the office said it meant more about please put your litter in the bin. That it said more about that than it did about Pricewaterhouse. So we thought it was a great design for litter bugs.
Oh my! Now, did finance run in the family?
It runs down one side. Yes, my grandfather was the senior partner of what was then a leading firm of accountants. Once partnerships were allowed to increase above 20 in the 1960s, they soon got steamrolled by the Pricewaterhouses of this world. I'll talk about the other side of my family later on.
Okay.
But, yeah, so he's there. So I think that when one starts out and one is deemed to be a chartered accountant, and my grandfather, who I just referred to, he was very influential on me, had a very big influence on my life. And he said, if you get that qualification, the world is your oyster. And thinking about it, I know for sure that he's absolutely right. The further I have got away from chartered accountancy, the more respect I've had as an accountant. And I must say, I am a pretty useless accountant, but people think that because you've become a chartered accountant, there's something there. But when he said the world's your oyster, I hadn't realized that the sea tends to move oysters around a fair bit once they get detached from wherever they've been growing. So you can see that as I have developed through the years, I have had to, or I have decided to, depending on circumstances, to reinvent myself. So I worked for this graphic design company listed on the USM. As a managing director of a subsidiary, I did acquisitions, investor relations, then found that I was the most useless salesman on earth when I went to Alcar, which was an organization which specialized in shareholder value analysis. Al Rappaport of Northwestern University was one of the founders. And from there, after an MBA, I went into the stock exchange where I spent 10 great years, and constantly reinventing myself, moving from role to role as the organization changed from a mutual to a private company to a company listed on its own exchange. So starting off as a regulator through project management on the SETS program, the electronic trading programs, markets development, inventing a market or a segment called TechMark, and then ending up as head of marketing. Swiftly followed by becoming finance director at FTSE, the index company. So I'm not sure there are many people who've been head of marketing and head of finance in the same career, but I think it just shows the fact that I'm perhaps a jack of all trades. Then from there, sorry. And from there, setting up my own business, which I still run as a mentoring coach, working with people as they move up their career chain and helping them before the QCA.
Now we'll get on to the QCA in just a split second, but why did you choose this Peter Drucker quote?
I love it because I do think that management does get in the way a lot. And certainly my belief is that if you set somebody a task, an objective, then the best thing to do is to stand out of their way. You might tell them what you want something to look like at the end, but if you tell them how to get there, you might as well employ a robot. So I do think management's job is to stay as far away from the work as you possibly can. And I think my team at the QCA would probably say that I do that, perhaps too much at times.
Now the QCA is a frightfully important organization. You've been pitching very, very hard for nearly 3 decades to try and get the message out there. Do you want to tell us just a little bit about the organization, and then we'll move on to the message?
Yeah, I mean, very, very simply, we were set up by a group of people, Brian Winterflood, Andrew Beeson, Ronnie Cohen, John East, and a few others, when the stock exchange closed the growth market at the time, the unlisted securities market. That was in 93, and in 95, after a lot of effort and a lot of persuasion, the stock exchange introduced AIM. So we were not even then a single issue organization, but we spent a lot of time campaigning on behalf of UK small and mid caps, AIM shares into ISAs, working on MiFID, market abuse regulation, prospectus regulation, that sort of thing. And I think we started off as the Citigroup for smaller companies, which fortunately got shortened to Cisco. And so in 2000, when a North American company of the same name arrived on these shores, they looked up and said, you've got our name. And we said, no, wrong way round. So they paid us a good slug of money to change our name to the Quoted Companies Alliance and paid for our first website. So we were very, very fortunate in the choice of name and the abbreviation.
So you're a registration squatting organization, is that right?
Well, I've tried to repeat it and failed many times, but it's great.
I once hitchhiked with a guy who had listed just about every company from Rolex on down in Ireland in the 50s, and he was rolling along in a roller, that's for sure. Anyway, small and mid caps, what is the big message?
Well, the big message is that they're by far and away the largest by number of companies on public equity markets, but they are deemed to be insignificant in terms of value. But if you start to break it down and you look at companies outside the FTSE 100, it adds up to a workforce of approximately 3 million people and contribution of about 26 billion in taxes. So it's not insignificant. And the beautiful thing is that these companies are innovators, they're market disruptors, they're market creators. They are change agents, and they have the ability to grow very, very quickly. And so, they build up new skills. And the problem is that, as we see it, one of the problems is that when such companies become insolvent due to lack of cash flow, whatever it might be, or they get taken out early, then there's this loss of intellectual property before it really bears fruit. And there's a danger in the markets that that companies arrive late and leave early. It's rather like a student's party. If you get it wrong, then everybody turns up late and leaves early. So we want to make sure that the market is as good as it possibly can be. Excuse me. I thought I'd just make it absolutely clear about the difference in the market. And this is just looking from left to right, the largest companies on the left, smallest on the right. The largest company at the end of last month, 109 billion pounds, 109,142 million. And the smallest on the main market in the all share index is 19 million. So why do we exist? It's because we want the voice of the 19 million to be heard. The smallest company in the FTSE 100 is about 1.2 billion, I think. So you can see that the drop off in size is huge, and yet the rules and the regs are written with bearing in mind the largest company. It's not how do we create an environment which enables companies to grow, rather than spending our time policing companies to make sure that they're not doing this and not doing that.
Okay, well, can you give us some examples of what you do as effectively a trade association?
Yeah, exactly. That's what we are. We're a membership organisation, and we're fighting the cause of the small and the mid cap. So, we met with Sir John Kingman, for instance, when he was doing his review of the FRC, made it quite clear, and he really took on board this idea of proportionality, that companies should be regulated in proportion to their resources. So they should still meet high standards, but one should bear in mind the resources available to them. And we try and repeat that in many different guises. You'll hear the word proportionality all the time. We spent money with Downing, the asset manager, spending money on some research done by Henley Business School, looking at the role of NEDs in growth companies. Again, this is about proportionality, showing that the role of the non-exec in the FTSE 100 is a very static role. I am chair of an audit committee. I'm chair of a REMCO. And then you see the roles of NEDs in growth companies. It's dynamic. They're working, they're rolling their sleeves up. Yes, they're doing audit committees and REMCOs, but they're doing so much more. They're bringing sector experience, all sorts of different ideas from their background to it. And there are some other examples there, which, I don't know if you want to pick any out, but
well, just a question, if I might, on the European IPO, that was recently, wasn't it, that you were asked to join that task force?
Yeah, that's right.
And does that mean that Europe still sees the UK as important for funding small caps and IPOs?
It's a good question. Certainly we, the QCA, see the EU as being very important. I'm part of European Issuers. I'm a director there. And that's effectively a European-wide QCA. And we see that as the means of influencing the Commission and Parliament. Because if we're going to end up with equivalence, we want to be equivalent to something decent. So it's really making sure that we get as far upstream as we possibly can to influence thinking in the
EU. Okay. Well, I asked you a few questions up front. So, what's top of your in tray? I know our listeners would be really keen on understanding that.
Well, it has to be this current pandemic. We have to really make sure that we're on top of it.
I haven't heard about this.
No, I'll come back to you on it because I only heard about it this morning. But,
good.
It's something that it arrived on the top of the in tray just now. So, we've put together things like everybody else. Everybody's calling it a COVID hub. Ours is called the lockdown lowdown, and we gather as much relevant information as we possibly can. But it comes down to trying to keep the small and mid caps as up to date with events as possible in terms of access to finance, what investors are thinking. And we're doing a lot of surveys and webinars just to really reassure people that they're not in this on their own, that they do share common problems, and that there are ways to work through them. I put in the top right-hand corner the EU IPO fund. This is something which the president of the Commission announced when she was coming out with her mandate, and her mission statement to Dombrovskis was to come up with an IPO fund. And so we're working on that in order to see whether we can get the Treasury to emulate it as well. So we're seeing, as a result of COVID, this is from a survey that we did through YouGov, that the lesson so far is, it's really, in a way, stating the obvious. But I think the fact that people are stating the obvious, really does endorse the fact that, liquidity, costs, cash flow, of course, remote working, but also just it's the ability for companies to really move quickly. I mean, one broking firm I spoke to, they had, they effectively in 2 days' notice moved their entire operations home, and making markets on a bandwidth where perhaps the spouse was working from home and 2 children were streaming Netflix at the same time. So, there's some very, very big changes which have taken place, which obviously I'm sure your audience are well aware of and probably enjoying or suffering the benefits or the disadvantages of it.
Yeah, it's been an interesting period, and I think this the old Warren Buffett quote, I think it's him, along the lines of, when the tide goes out, you see who's swimming naked, is very, very true at this point in time. So here, in terms of
Absolutely.
COVID-19, you say here no going back. Do you just want to explain that?
Well, I think there are some things, or in fact, this isn't what I think. This is what our respondents to the YouGov survey had said to us. That when we said, "So, what do you think's changed forever?" The first one, okay, talks about public markets closing for a while, factors such as Brexit and Woodford causing huge problems. We are seeing fewer fund managers running less money, and we are seeing fewer advisors. And I think that is going to have, once that falls down below a certain level, you lose the strength of what is at the moment a strong ecosystem. And I think that's really important. But I think it's the second quote that really struck me. The death of second and third brands, the flight to safety, perhaps. But I think that it might be a flight to inequality, in the sense that these large brands will dominate because the shelves will be smaller. And we're already seeing it in the supermarkets, but I think we will see it elsewhere where people really want to nail down supply, and not allow as much innovation as previously perhaps was permitted.
Yeah, it's an interesting point, and then you could also contra that with things like China plus one policies and things where we had a couple of weeks ago, we had a member of the Chinese Monetary Policy Commission on, and he pointed out even within China, they're trying to have a plus one. I was like, what other country are you sourcing things from? So this tension of efficiency versus robustness is, I think, going to be an interesting one to play out. But it has been a long-term trend, as decreasing competition, as the economists picked up on it. I think it was 3 or 4 years ago. Very, very intriguing where we go here. Now, one of the things that when we were swapping notes about today was kind of funny. We had this quote, and I was absolutely desperate to attribute it to Alan Greenspan, and then found out I was wrong. But why do you like this quote?
I love it because language is a map, and as people have said, I mean, it's something which comes from NLP, neuro linguistic programming. But the map, language is a map, but the map is not the territory. And I think that we all take language too literally. It seems a strange thing to say, but we have to be very, very careful over how we speak, how we operate. And I was reminded of a conversation I had during the last crisis, where I went to see a very, very large um, takeover organization, I'll call them that, and they wanted to completely reconfigure their organization from being the heroes who got a deal, did transactions, to ones that developed into relationships. And they said, could I help develop this organization move from transaction to relationship? I said, I don't do that. I'm just a coach. So I brought along a friend who does do that. And I asked the global head of HR if she could repeat to me what she'd previously said. And she did. And then my friend said, just to make sure I've understood it, could I just, sum up? And he repeated verbatim what she had said. My reaction was, he's added absolutely nothing to this conversation. Her reaction was, I have never heard that expressed so well. He had used her language. So she received the language that she understood. And it's little things like that that I find fascinating. So this quote it sums up how I see the world, really, when it comes to language. And it feeds on my work as a coach and mentor.
And it betrays your sales background, I can tell.
My
Very,
lack
very
of
good.
sales. I was never
Now,
good.
now, you and I had a wonderful and wide-ranging conversation back in October, somewhat prompted by a mutual friend of ours, Robert Pay, or Robert E. Pay, as he likes to be known if he's listening in. And in addition, of course, we were very involved with the employee share ownership via the ESOP Center. And then I was absolutely delighted, that you remembered at least that we had done a report for you some 18 years ago on institutional investment in smaller quoted companies. But you then came back with what you thought were our common interests, and I noticed a huge amount of overlap here. Um, so do you just want to touch on a few? And in fact, this is a good point to bring in some questions that are popping in from the audience, and keep them coming, folks. We do have a bit of time. Equity versus debt, which is the first one. And Bob McDowell, who's listening in the Channel Islands, wonders how much more difficult will small companies find raising equity post COVID-19?
I think at the moment it's okay because the small cap fund managers know exactly what they need to do, and they have got some firepower to provide. We're certainly seeing that there's a huge amount of money being raised at the moment in terms of equity. The danger in looking at that first bullet on equity versus debt is that companies use the government's debt finance schemes to take on more debt, and they find that their planning horizons move from a year, 2 years to the next 6 weeks to see whether they can pay back that debt, because the guarantees are in favor of the banks, not the companies. But I do think there is a real challenge. At the moment, there are short term, there are inflows of cash into the fund management of small caps. But long term, I think in the last 20 years, there have only been 2 or 3 years when there have been net inflows. So I think the question is really well put. And the answer is, I fear for the future. And it's why we have a job to really keep on persuading the regulators and others.
Now, you highlighted the S in ESG, social, as opposed to environmental and governance. Do you want to just explain that?
Yeah, I mean, I think that right now, the environment has probably fallen away as being a matter of huge discussion. I think that there's a lot of very good stuff happening because of human inactivity. In terms of governance, we're seeing companies and the way they organize themselves. And the ones that organize themselves well will do well. But the S bit, the social bit, is really, how are companies treating their workforce? How are they treating their suppliers and customers? And I came across one company recently, a finance director was telling me that the company was topping up not their own workforce's furloughed amounts, but one of their suppliers, because they absolutely valued that linkage and they wanted to keep it alive. And so they were topping up another company's workforce's furloughed amount. And I think that's a huge S. And I think it's something which, okay, it may be self-interest, but it's actually thinking wider than just today's money, today's profit. It's thinking about the future. It's thinking in a more rounded way. And I think we have a huge role to play as the QCA to build up principles, if you like, of social behaviour, as well as having published our corporate governance code. We think that that's a big area to follow.
Yeah, I'm kind of with you here. Sitting in the city, we've seen both extremes. Frankly, we've seen extremes of really good behavior. In fact, I know of two firms who've done exactly that, gone over the head sort of a supplier and said to the supplier's staff, "You're part of the team. Forget the formalities. We're going to take care of you."
Yeah.
And that was very encouraging. And in fact, both of those instances happened in early March. So, right off the mark, clear, positive, ethical reactions, I think. On the other hand, I noticed the other day that we've seen the FCA looking at launching a class action suit, perhaps against insurers over their interpretation of business interruption insurance. So we're seeing all sorts of things here, and I'm not saying the insurers are right or wrong. I'm just these sorts of behaviors are going to play out, and I think in the wash we're going to find out who is really acting from the heart. Now, you also wanted to say a little bit about disintermediation.
Yeah, I mean, it's interesting to see as everybody goes home to their caves, what happens next. And we're beginning to see, certainly in the primary market, I mean, it's been happening in the secondary market forever, but in the primary market, we're starting to see technology play a part in terms of making the market more efficient. And we're seeing, I think, the beginnings of disintermediation. So at the moment, we're seeing deals being done, money raisings being done with nobody actually meeting anybody else. So it's all being done, through technology. Gradually, I think we will see the broking, the accounting, and the legal environment changing quite rapidly.
Well, it almost has to. The costs of listing on AIM have grown enormously to the point that it's just not a viable funding source, really, for those who aren't already there. I might contend. I know that somebody will shout back at me, but that's how I feel. Now, you mentioned here stock markets as a social good, and interestingly, I notice we have Thomas Crothers on the line and a couple of others who are quite keen on the idea of social stock markets and stock markets as a social good, not necessarily the same thing. What was your comment there, Tim?
It's a very simple thought, which is that actually what stock markets are very good at is enabling the Commonwealth, if you like, to get involved in investing in companies, benefiting from from the results, the good results of companies. So it actually acts as a wealth distributor, and I think in that way, it can involve the whole community. In the coffee house, when the stock exchange first started, there were many different people who could go in. There was no bar on who could go into the coffee.
Well, Graham Leaks is asking, what role do you see for cooperatives? Will that sector grow?
I think so, yes. I mean, I think that there are some private organizations where there's a founder, an entrepreneur, if I've understood the question right, where the founder will look to turn the business that he or she has created into a cooperative, into a mutual. And I think the John Lewis model is obviously a good one, but I think more and more people will see, as they think about ESG and the S bit, I think different forms of ownership will start to become more prevalent. Yeah, and a good thing too.
You also had down here enabling versus policing, fight for proportionality. And I'd like to come up on local versus global if you want to make a comment on those two other points.
Yeah, enabling that, it's something I feel really, really strongly about. I mean, our corporate governance code is about enabling companies to organize themselves in a way where they can create long-term value for their investors. If you create long-term value for investors, you've got to have looked after the other stakeholders, the environment, whatever. And codes for me are about enabling, not to create a checklist to say, oh, you haven't done this or you haven't done that. I mean, I am delighted when somebody says we have not followed this bit of the code because it has no bearing on our ability to create long-term value. that is the right interpretation of our
Yeah,
code.
that's what we need
So
more of. Yeah.
yeah, and it's proxy voting advisors get in the way of that. All sorts of people get in the way of it, but that's where we start out. And proportionality is that point I made right at the start: 19 million versus whatever it was, 100 billion. I mean, it's a crazy figure, but trying to get regulators and policymakers to really focus on who they're, who they're targeting legislation on is really, really important.
Now, Zien, with PwC, no less, had an immense input into a regional initiative 2 decades ago by Advantage West Midlands to create InvestBX, which had high ambitions and then fell foul of ostensibly state aid, ultimately won the state aid argument, but at that point was exhausted. Bob McDowell is also asking, how important do you regard regional engagement in the UK? Particularly if you're going to move into this idea of cooperatives, employee involvement, ownership, and spreading the wealth.
Um, now that I know that Thomas is on the is in the audience, I have to think very carefully because regional exchanges have come and gone, if you like, in terms of ideas. I think regional segments of exchanges are incredibly important. And I think highlighting the companies in segments is very good. One of the things that never really got off the ground after the stock exchange introduced Techmark, which was the segment for technology companies, was the next one was called Landmark, and that was a regional segmentation of the stock market. And it enabled companies, investors, to see which companies were in their local area. But we didn't take it, the stock exchange, didn't take it on to the next stage, which was to get media and other organizations involved in gathering around the local companies, if you like, the local grouping, to really make something of it. And I think it was a good idea, but perhaps at the wrong time. There was too much else going on, but its time will come.
Well, sort of a crazy thought, but a lot of the COVID-19 talk about being more self-reliant, being more local, being able to deliver things might, do you think, enhance that sort of movement towards localism?
Well, yeah, I think it will. And I think on a slightly larger thought is that, if you look at indices for the UK, what is the best proxy for the UK economy? Well, is it the FTSE 100 really, where the top 10 companies account for 35% of that index? Are they local companies?
Yeah.
We do need, a barometer for the UK. We need a barometer, if you like, of public and private companies, perhaps for the regions, outside of the capital. I think there's a lot, that can be developed. The question is whether investors will follow into something which could be seen to be too narrow. But I think it's to be tested.
Well, certainly, it's a vision that we've had here, or we wouldn't have gotten involved because InvestBX was not an exchange; it was a window onto the West Midlands region. And I've often contended that the stock exchange doesn't do a very good job at all. It's got a pathetic market share. If the idea was to have, what is it, under 3,000 companies. And then we, of course, have these skews even more exacerbated, one might argue, in America, where, am I correct? I think it's the top 5 tech companies are 20% of total stock market capitalization, which is, kind of certainly not representative of the American economy if a fifth of it is held by 5, West Coast tech firms. Or maybe it is representative. So let's not be too quick. Now, we're going to have to move on a little bit more swiftly. It's my fault. I'm enjoying this. You wanted to make a comment here about coffee houses.
Yeah, it was just how exchanges started, which is bringing people together, creating some excitement, telling a story about we're going on this fantastic voyage, we're going to see if we can bring back this. It's funding events, and it was apart from the South Sea bubble and tulip mania, it developed the joint stock company, enabled very many people to share in projects and support projects and that sort of thing. But as markets developed, and I was, I'm fascinated by the Macmillan report and the fact that even then in 1931, it was saying that basically the British finance industry was great at supporting international companies, but absolutely useless at supporting domestic companies. And from that came the Industrial Commercial Finance Corporation, ICFC, and out of that came 3I, Investors in Industry. And I think it's, investors in industry is absolutely the right thing that we need. And it was needed in 1931. And in 2008-9, it was needed again. And the Business Growth Fund came from that, five banks. But, if you look at 3I, it grew and it grew and it grew. And finally, the bank sold it off. And it's not investing in small caps, mid caps anymore. It's very much an investment trust doing what investment trusts do. So I think we go round and round in circles on these things, but hopefully we're getting into a cycle where we will see more investment in small caps.
I might challenge that a little bit. I mean, when Investors in Industry was formed, there was a bit of arm twisting, but the banks got quite a few concessions about competition and stuff. I look at the German model where the banks have to compete rather than be an oligopoly. So you've got 1,800 banks there versus 5 controlling 65% of corporate and 85% of PCUs. So in some senses, is it not kind of a sop to us in the government to say, okay, we'll form a fund and we won't make quite as much as we would for a while until we sell it off.
I'm sure it was a political bribe, if you like. I think it's at the time of the crisis, all of a sudden the city says, oh, we can help small caps, mid caps, whatever. And I just wonder what they're doing in between each crisis, because it sort of, it disappears, if you like.
Yeah.
That sort of help. And that's because wholesale markets do not do primary markets. It's the tail wagging the dog.
Now you love this theater analogy, and this shows us not as all right on the floorboards or the pitch. Is that correct?
No, well, that's right. I mean, I've put some numbers here. Since '99, number of companies outside the 350's fallen 72%. We're seeing since 2007, companies have fallen by 25% on main market and 49% on AIM. And I think tellingly, the average size of companies coming to IPO on AIM has gone up from 21 million to 127 million. And I'm asking myself, what is this all about? And if you do surveys, as we do, back comes, overburdened by regulation. And I get that, and we will fight tooth and nail to overcome that. But I do think the other bit is that market operators are terrible at marketing, and they do not sell their product. They build something and they say, and everybody will, arrive at the ground. The players will turn up, the referee will turn up, the spectators will turn up. We will, it will happen. And I don't think we have a theatre of dreams. We do not have people who say, my ambition. When I was much younger in the 80s and I started looking at the city, I was on secondment at the stock exchange. There were great little companies joining the markets, Tyrax, Sock Shop, all sorts of shop, sort of retail advertising agencies. They were all joining because they felt that this was a rite of passage. This was something which enabled them to get to the next step. And I don't see that as being an automatic thought. And, it was the days of Thatcherism with privatization, so people really understood equity. And I think we need to rebuild our theatres. We need to get good marketing. We need to really raise awareness of how important permanent equity is compared with temporary bank debt.
That is really inspiring, actually. I'd like to support you on that. Now, just to round this off a little bit, I asked you a few staccato questions. We'll just may have to slip through these quickly, but what was your most surprising thing recently?
Well, I've just put there, next time I'll be an architect. As I said at the start, I became an accountant because my grandfather was very persuasive in that area. If I said to you that my brother, my father, my other grandfather, and my great grandfather were all architects, and they have left, if you like, lasting temples to be admired. The Supreme Court in Singapore was my grandfather's
Oh, wow.
design. I think next time I'll do that. Next time I'll do that. The graphic design company I work with inspired me because of the creativity. And I'd like to think that I bring some creativity to my job, but next time.
I seem to recall a Smirnoff ad in the 80s or something along the lines of next time I'll be an accountant. But all right.
Absolutely. I've forgotten
Yeah.
that.
All right. And your most thought-provoking remark.
Yeah, it's just that it's the little thought that if you change the rudder by 1 degree, you can be, you know, you can either move away from an obstacle or you can move towards a goal much more easily. It's just the figures there. 1 degree as you head towards the moon, you miss it by 4,000 miles. I think I'm fascinated by something that is such a small change can make such a big difference. And if you change your behavior, you change the way you deal with people just in a small way, they have to change the way they respond to you.
Well, I hope this is an incentive for all of our listeners to revisit their trigonometry. Anyway, uh,
I didn't work
the
that out
funniest thing
myself.
you've seen most recently.
Well, I mean, this goes back a while because, as I say, it's a fact. But I was working in financial PR, and we had a client that was a big retail chain, and their merchant bank was Morgan Grenfell, and they were telling their client that they should prepare themselves for a takeover bid because it was bound to come. But they said that the financial PR company should be the one that sort of tested the company and made sure that they were ready. I never quite understood why Morgan Grenfell should be saying that. My boss, David, had no idea how to do it. I had no idea, but because he was my boss, he told me to do it. So he said, you prepare, you get them sorted out. So one Friday I drafted, having been reminded several times, I drafted a takeover bid for this retail company. And I said to my secretary, send it over to David so he can look at it over the weekend and he can tell me what he thinks. So on the Monday, I rang him up and said, what did you think of the facts I sent over? And he said, what facts?
Uh-oh.
And I said, the one about the takeover bid. And he said, I didn't receive it. So I went back to my secretary and I said, did you send the facts to David? And she said, yes, I did. And she'd sent it to David, the finance director of the client, not my boss, David. So with much trepidation, I rang up to apologize, for
Yeah.
sending this thing. And the response was, you caught us completely unawares. I had the afternoon off. The CEO was visiting a factory. The chairman was nowhere to be found. We were a complete shambles. Thank you so much. It's been really, really helpful. So, you never know, do you? You never know.
You don't know. Life as we live it. Now, I
They
asked you
do
to
get
share with
taken
the
over.
audience a big suggestion and something you'd like to ask them. So, in our closing couple of minutes, maybe you could touch on those.
Yeah, I mean, the big suggestion, it comes again from governance, where everybody talks about best practice. And, we gold in the UK, we gold plate everything. We take great pride from gold plating. Well, it exhausts me, that sort of conversation, because actually in the growth company world, you want to do things well, but you don't have to be the best, particularly at things like governance, particularly at things like reporting. You just need to be good. The work to get from good to best is really a waste of time. If somebody says, you're good at this, that's good enough for me. And, I can get quite passionate about it because I think this is again about proportionality. People lay it on too thick about what's expected of them. And when you hear investors say, we want all the companies on the main market to do the same thing, that means that the smallest company will be not just gold plated, but be completely covered in gold in the way that in Goldfinger people suffocated.
Yeah, it's a tough one, isn't it? And the reason I particularly hate best practice is even the word. It implies we know exactly the right way to do something. We do it. Therefore, there's no point in learning because, well, we're doing the best thing, aren't we? Whereas I'd
Yeah,
like to see a lot
yeah.
more variety in the system. Now,
And
I suggested that this was an opportunity to ask the FS Club community something you'd like them to support. And so this was your big ask.
Yeah, I mean, in a way, it's a no-brainer, but I do think that we are going through a period of reflection. And I think it's really important. It comes back to the S in ESG. It comes back to, say, 100 CEOs in America. Was it last year? They all signed a letter saying that the maximization of profit was no longer the goal of corporations in America. Johnson and Johnson have always talked about having a charter, and at the end of it says, and providing a fair return to shareholders. And I think that's where we're going. It's about fairness. It's about involving. There's a lot of conversations about democratization, about employees having more say in businesses. And when we see who the essential workers are at the moment,
Yeah.
they don't tend to be the people who are deemed to be essential 2 years ago, 3 years ago within businesses. And yet somehow, the true light has been shone on the true people who make the difference. I'm sitting at home.
Yeah, it's a good point. There's very little correlation between what people earn and what's considered essential in today's climate. That is a really telling point. We covered a lot of ground there, and I pulled the questions from the audience in, and you very kindly stuck to time, which is always a delightful thing in a world that seems so short of it. Even when we're all sitting
It's a
at home,
fluke.
we all seem short of time still. I don't know what the problem is. I'm beginning to think we ought to take 4-week breaks every year, but let's not go there. Just in terms of outlook, where do you see QCA in another 3 years under your helm?
I'd like to think that we will be still the organisation that punches well above our weight. I'd like to think that we have not just got credibility with the regulators and the policymakers, but that we're sitting on the same side of the table and working through issues in terms of improving access to capital, reducing the burden of regulation, and really inspiring market operators to really turn on the lights in their stadia and really bring in good teams, good crowds, create great competitions. Because if we don't do that, our economy, our future will be seriously affected. But I'd like to think that QCA will be, if not the catalyst, one of the catalysts in doing so.
Well, I hope, in fact, we can take that journey together, because your very important point about commonwealth and how COVID is making us re-examine that, what you're doing at the QCA to get that out there, and hopefully what we're trying to do in employee share ownership. And there are many other initiatives as well that contribute to that goal. And I think that is a really, really important one. So, Tim, it's been really great of you to be here. I'm just going to say, if I might, again, thanks to those sponsors who make this possible. It really is a joy that you give us so much liberty and freedom to cover what we'd like. I think Tim and I both have a question, which is, when would we know commerce is working? And I think Tim's kind of given a bit of an answer there, that when we feel that we've got it right about our commonwealth and fairness. And so, Tim, sadly, I'm going to have to do this on behalf of the audience, but if I may, I'll give you a virtual hand clap now.
Well,
And,
thank you very much.
thank you so much for sharing your time. It's been really, really good of you. And we wish you and the folks at QCA all the very best. Thank you.